Gold and silver are glittering again, not just as ornaments, but as serious investment opportunities, with prices surging and global uncertainties adding shine to these metals. But the big question is this rally just getting started? And how can investors participate smartly in this rally via the mutual fund way? Welcome to the special edition of Mutual Fund Corner. And on that note, let's welcome Nilesh Shah, Managing Director at Kotak Mahindra AMC, to understand everything about this gold rally, the precious metals rally that we are seeing, and his insights on that as well. Nilesh, always a pleasure speaking with you. Thank you so much for joining us today on this special occasion. And all we can talk about apart from equity markets now is the rally that we are seeing in gold and silver prices. There are a lot of things that are happening. What can you pin down in terms of reasons why we are seeing this rally in gold and silver prices that investors should be aware of, because there is increasing interest that's coming by in this asset class?
So there's only one thing which is happening in gold market apart from what was happening before: the central bank buying. Global central banks, post their experience of Russia-Ukraine, where Russian $500 billion FX reserves were seized by Western world, and that prompted every central bank about safekeeping of their reserves. The gold which was lying with Russian central bank remained in their custody. This prompted everyone to shift part of their allocation from securities into gold. If we see Western world central banks, 60 to 70% of their FX reserves in US Fed, in Germany, in Switzerland, is in gold. The Eastern world, Japan, India, China, their allocation is about 10%. Now, Eastern world central banks have to increase their allocation to gold, and some have even started dabbling in silver. So it is the central bank buying over last couple of years, from 2022 especially, which has resulted into this kind of price movement.
Okay. So, usually when people talk about gold, it is not the main portfolio when they look at it, because it's usually the satellite side of things. When we look at gold, they say, okay, if some amount is left, we should look at investing in gold. What do you suggest the allocation to gold or silver be in someone's portfolio? And while we talk about other asset classes like Bitcoin, people say there's no underlying. If people are buying it, that's why it is surging or going down. What explains the move apart from central bank buying? I'm talking about a novice investor who doesn't know what is the underlying for gold.
So even we don't know what is the underlying for gold or silver. There's no dividend, there's no bonus, there's no cash flow, there's no fundamental things to value gold or silver. They are store of value because of thousands of years of history. They are internationally tradable because everyone believes in that history and storage of value. This creates unique characteristics for gold and silver. And the reserves of Russian central bank, which were seized by Western world, that has acted as a catalyst for gold and silver price up move. Gold moved first because central banks were buying gold. Silver has now started moving, partly backed on industrial demand and partly backed on central bank buying. So please be aware that both these assets, despite their sharp run-up, despite their long history, should be a limited percentage of your portfolio. These are assets where there is no fundamental value, or there is no way to determine fundamental value. It's always in the belief that someone else will buy it from you at a higher price. So do invest in gold and silver, but being aware that these are the assets which are difficult to value fundamentally, and hence should be a limited part of your portfolio. Is it 5, 10, 15? That depends upon your risk appetite, that depends upon your time horizon.
Totally take that point. So now that you're saying people buy it because they think they'll sell it at a higher price going forward, but it has already run up so much. Now there is a fear as well, what if I buy and the price goes down? So do you think we are in the early stages of a multi-year uptrend in gold prices? How sustainable is this up move that we are looking at right now?
So I 100% believe that commodity prices fluctuate. If they have gone up, they will come down also. And when there is a sharp run-up like this, the correction also will be there. You have to observe two things. One, the central bank intervention. as long as global central banks behave like Indian housewife, buying gold and not selling, you can be sure that gold prices will remain in uptrend. Does it mean that every day it will go up? Answer is absolutely no. We became bullish gold somewhere in 2020, post-COVID. At that point of time, the mining cost of gold was reasonably close to the market price of gold, and hence we thought that the jewelry demand will ensure that gold prices move further up. 2022, we became super bullish on gold once Russian central bank's reserves were seized. Today, do we have similar confidence? Answer is no. We have to wait and watch at what level, up to what level central bank will keep on buying. In the past, central banks have become net seller of gold also. There was a time when gold prices, if I remember correctly, touched $800, and then it corrected 75% to about $200.
Wow.
This was all driven by frenzy getting cancelled and central bank turning sellers because they thought this appreciation was too much. So do remember that gold prices have corrected in dollar terms by large percentage.
That's a big cut, actually. That's the news for me as well. Since the time I've started tracking, it's always been in that $1,000 mark. And that's a very important point as well. So this is about gold. We are seeing a lot of interest coming in from central banks. Silver, you said, of course, there's industrial use. And that is the theory that we saw during COVID as well, right? Yeah. There'll be increased industrial use, new energy that we are looking at in terms of transition. For now, is it a catch-up that we are seeing in silver prices, or do you think this is also a rally which could continue? Of course, there'll be fluctuations, but it is start of a structural up move for silver.
So in silver, at least in Indian context and in ETF context, I'll break it up. Undoubtedly, there is industrial demand from electric vehicle, from solar cells. There are also some central bank buying in silver. Gossip is that there is more inquiries about central bank buying. And then there is momentum which is built because gold-silver ratio moved too far in favor of silver. The frenzy has now reached Indian shore, where silver is in short supply, and it started trading at 10 to 12% premium to their international parity price. This is reflected even in silver ETF. When you buy silver ETF today, you are paying 10 to 12% premium to enter silver ETF. In many periods, 10 to 12% was a return of silver over 1 to 2 years.
True.
So you are, in some sense, paying that kind of premium to just enter into silver trade.
Say somebody who's starting right now, somebody who's very young, wants to start investing gold. What is the best way to go about investing in gold and silver? What do you suggest?
So one, be aware of the risk. Central bank buying, industrial demand supply. Second, please don't expect the last year's return to come in next 1 year. There will be ups and downs, and the returns will not be comparable to last year. So if you are investing in precious metal, ensure that it is a reasonable percentage of your portfolio, not significant overweight, looking at the past performance. Whether it's 5, 10 or 15% depends upon your risk appetite. If you can do SIP in gold and silver, that is even better. You will buy something at higher price, you will buy something at a lower price, and you can continue to invest. The one thing which people should monitor, when lab-grown diamond came, natural diamond prices crashed. Could there be manufactured gold? Well, there are two possibilities. One experiment was in CERN where they converted lead into gold, few nanograms, few nanoseconds unstable. So that's not a serious concern. It will take years before we hear on them. But the second experimentation, as claimed by a startup in US, where they converted mercury to gold through nuclear fusion. Now that technology is probably going to happen faster. So keep a watch on that. Like lab-grown diamond crashed natural diamond prices, manufactured gold could natural gold prices.
Okay, yes. And you spoke about nuclear fusion and that entire science being used. And India is looking at investing a lot there as well. So let's see if that is used domestically as well to do what the scientists are preferring to do with gold. It's a very interesting conversation. We have a lot more to catch up on as well, Nilesh, but we have to get into a quick commercial break. We'll come back and we'll now delve into how to take exposure into gold. Is it via ETFs? Is it via gold funds? Or physical buying is the best way to take exposure? But stay tuned for that conversation on the other side of the short break. Welcome back. You're still tuned into this special edition of MF Corner, where we are discussing everything in terms of moves that we are seeing on precious metals, gold and silver, stellar rally, and what is a better way to discuss this during the festive season on this special edition. Nilesh, we have discussed what are the reasons why gold and silver have gone up. But do you think between the two there is one of the precious metal which has more advantage? Do you think one will move better than the other?
So undoubtedly, there has been ups and downs in silver-gold ratio. When central banks are buying gold aggressively, gold does well. When industrial demand is pushing the prices, silver does well. And both of them have fluctuated over the years. Directionally, they move in the same direction mostly, but there are fair amount of divergence.
Okay, so there's no real number that we can put to that as well, of course. That point is taken. For somebody taking exposure to gold, what is the better way? Is it gold ETF? Do you stick to our traditional way of looking at physical gold, or is it gold funds?
So when you're buying physical gold, you are taking the risk of higher transaction cost if you are buying in smaller denomination. We all buy gold on Akshay Tritiya, Dhanteras, Lakshmi Pujan, but the transaction costs are higher. Second, quality of gold. Now with hallmarking, those worries are behind. But if you're buying it in ornament form, there is making charges and there is some worry on quality. Third, if you buy physical gold or silver, you have to store. Silver is bulky, so storage will become a challenge. Many people put gold in their bank lockers. If there's some mishap over there, it's your responsibility and your cost. When you buy ETF, it's an online purchase. Second, the custodian keeps this gold and silver. They keep it in earthquake-proof structure. There are CCTV cameras. There is insurance on it. So protection and storage doesn't become your headache. It is managed by the fund. And most importantly, the transaction cost of trading in gold and silver ETF or fund of fund is far, far lower compared to buying physical gold or silver. So I will recommend, do consider gold, silver, ETF and fund of fund as part of your portfolio. There are many female who do SIP or Vishy with roadside jeweler. They give money for 11 months and then 12 months they get the ornament. Now, this has worked well for women over a period of time. But then there are also mishaps in this. Recently, Taurus, a jeweler, disappeared in Mira Road and a lot of people lost money. Some time back, Goodwin Jewelers had disappeared. When you are investing in ETF, fund of fund, you don't have to worry about such kind of mishaps. So if you want to consider SIP in gold and silver, this option also can be considered apart from your jeweler.
So, we of course are talking about the benefits of getting into ETF, but investing is a lot about behavior, and Indians are emotionally attached to the idea of buying physical gold. In fact, if I have a conversation with any elderly person in my family as well, they'll be like, you do not hold that asset. This is an asset which should be held. So just being a devil's advocate here, you're saying not entire exposure should be through physical. There could be a split between the two.
Absolutely. See, you won't be able to wear a statement of account of gold and silver ETF and go to the wedding. You will require ornament. But you can always have space for both in your portfolio.
Yes, so it's not entire no for physical gold. Of course, it is something that you can hold for your daily purposes or for festive purposes as well. But for investment, look at ETFs and fund of funds as well. Now, Kotak AMC also has both gold funds and silver funds. How do they work in terms of strategy? How are they different from the other ETFs or sovereign gold bonds? I know now the sovereign gold bond issuances are not coming in, but people are not warming so much to the idea of ETFs as well. How do you think we can tell them, or you can tell them, in terms of the benefits that ETFs have or the passive markets have when it comes to even investing in commodities?
So one, it's a convenient way. For buying physical gold, you have to go personally. There's digital gold available, but that's again not as popular as ETF. ETF is online. Storage and protection, you don't have to worry. And the transaction cost is lower. The only negative for ETF is that you can't wear like an ornament. But then we are not talking about making charges either. Many a times people have bought gold saying that jeweler will do the buyback. Now, please remember the amount of jewelry sold by him versus what liquidity he has. So there will be challenges on the liquidity also. Compared to that, in mutual fund, liquidity is reasonably better. So overall, it's lower cost, better convenience product. But certainly, both physical gold, silver, and ETFs will have part in your portfolio.
So, with such funds where ETFs or gold funds which are tracking a commodity, the tracking error part becomes a thing that investors often ask about. So, if one is looking at a lot of ETFs, all gold ETFs, but provided by different AMCs, what is the best way to, look at tracking error or take some investment in one of them?
So, what is tracking error? It's basically difference between the price movement and net asset value of ETF. That's primarily driven by transaction cost, expense ratio, and execution cost. Now, wherever tracking error is less, you could be reasonably sure that we are as close to the price as possible. So, lower tracking error as a thumb rule can be interpreted as a better managed ETF, which gives you exposure to underlying asset class. So, while evaluating fund, do consider size as well as tracking error.
So, you have both silver and gold ETFs. You said you were first bullish in 2020, then all the more bullish in 2022. We've seen a massive rally already. What is the realistic return, internal returns that you have, come across or thought of for these funds in the next 3 to 5 years? Again, I know it is not a number that you can put, but I think the main question is, do you think this asset class will continue to outperform going forward?
So their outperformance will be dependent upon two things. Central bank activity. Are they buyer? Up to what price? At what price they become seller? I have no doubt in my mind that if they become seller, prices will correct. If they stop buying, prices will correct. Prices will rise only up to that price at which central bank buying will be supporting. On silver, obviously, apart from industrial demand, we have to see what is this central bank activity. So central bank activity becomes a fulcrum around which gold and silver prices will move. The second thing is technology. The day manufactured gold appears, there will be adverse impact on gold prices.
Technology can be a bane or a boon for at least this asset class. Now that we are talking about so many factors that could happen or not happen, and that will impact commodity pricing. But if someone is looking at gold today, do you think they can play their investment thesis via gold or silver versus equity markets? Because markets are always subjective, so are investments.
So my recommendation is that please follow dharma of your asset allocation. Equity, there is fundamental value attached to it. Hence, it could be larger part of your portfolio. Gold, silver, crypto, there is no fundamental way to evaluate their worth. Hence, they should be smaller part of your portfolio. You could have everything in your portfolio: equity, debt, real estate, precious metal, crypto, but it should be according to your risk appetite. Whenever price is correct, you should have ability to average. If you're only playing the momentum game, it may work in the short term, but over a period of time, it will create pain.
Okay, so I'm talking from a perspective of a long-term investor, not somebody who is playing just the momentum, as you said, or playing short-term gains. So in the long term, somebody who's looking at investing today, keeping it for 20 years, do you think gold could be, say, 25-30% of their portfolio?
So in order to be alive in long term, you have to survive the short term. When there are ups and downs, the long-term investor also ends up losing their patience. We had seen in COVID-20 where people who didn't need money also redeemed because markets were correcting.
Yeah.
That was the worst mistake of their life. They converted their notional loss to real loss. So to me, asset allocation is the dharma which you have to follow every day. Just because I'm 20-year forward-looking investor doesn't mean that I can ignore asset allocation. Just because I'm long-term investor doesn't mean that I can ignore my risk assessment, my risk profile. Bet according to the risk you can take. And all gold, silver does not have a fundamental way to evaluate. And hence, it should be a reasonable percentage of your portfolio.
Nilesh, it's always a pleasure speaking with you and getting your insights on markets, on mutual funds, investments, and life in general as well. So wish you a very happy Diwali to you and everyone in your team as well. And with that, we'll do one thing. We'll take your leave on this edition of MF Corner, but do stay tuned. More news and updates are coming up next.